Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Trilogy Metals Inc. Annual Report. Trilogy Metals Inc. offers a range of services related to mineral exploration and development. The company's primary focus is on exploring properties that contain copper, cobalt, lead, zinc, gold, and silver deposits. Specifically, it holds interests in the Upper Kabuk mineral projects, which include the Arctic and Bornite properties. The Arctic property contains polymetallic volcanogenic massive sulfide deposits, while the Bornite property features carbonate-hosted copper-cobalt deposits. These properties cover a vast area of approximately 448,217 acres, located in northwest Alaska's Ambler mining district. By providing exploration and development services for these mineral properties, Trilogy Metals Inc. is contributing to the discovery and extraction of valuable minerals. The stock price of Trilogy Metals Inc. has skyrocketed by approximately 245% to 260% over the past year due to a series of strategic developments related to its Upper Kabuk mineral projects, UKMP, in Alaska. The most impactful event was the U.S. government's acquisition of a 10% equity stake in Trilogy Metals, which led to a remarkable jump in the stock price. This investment was part of a broader U.S. initiative to secure domestic critical mineral supplies and reduce reliance on foreign sources. Concurrent with the investment, the U.S. administration issued permits for the Ambler Road project, a proposed 211-mile industrial road that will provide access to the rich deposits of copper, cobalt, gallium, germanium, and other critical minerals within the Ambler mining district. In addition to these developments, South 32 approved a $35 million work program in January 2026 to advance the copper-rich Arctic deposit. Trilogy Metals also strengthened its strategic advisory and leadership teams to accelerate the advancement of its Alaska projects. Furthermore, the company announced a fully funded $35 million budget for Ambler Metals in 2026, which will be used for development and permitting activities related to the Upper Kabuk mineral projects. These events collectively demonstrate significant government and partner support for Trilogy Metals projects in Alaska, thereby reducing project risk and boosting investor confidence. The combination of these strategic developments has driven the stock price surge, making it an attractive investment opportunity for those interested in critical minerals. Trilogy Metals Inc. maintains a market capitalization of $1 billion, broadly in line with the industry peer group. Trilogy Metals Inc. trades at a higher price-to-book ratio of 4.86 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 1% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes, such as buybacks or dividends, rather than operational deterioration. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, several key developments have contributed to potential revenue expansion. The positive results of the Bornite P, which indicate a mine life extension to over 30 years, are a significant driver of revenue growth. Additionally, the sale of $25 million worth of common shares has provided net proceeds for continued development of the UKMP. Furthermore, the granting of permits for the Ambler Access Project by President Trump has facilitated access for economic purposes such as mining. The increase in contained Cu, MLB, from inferred total South Reef resource and higher average grade of 2.79% Cu compared to previous estimates are also expected to boost revenue. Optimized stope shape and cutoff grades have resulted in increased throughput and revenue, while the increase in inferred mineral resources and contained copper has further contributed to potential growth. On the other hand, several factors may lead to revenue decline. The inability to define proven and probable reserves is a significant concern, as is uncertainty related to title to our mineral properties. Mining and development risks, including infrastructure, accidents, equipment breakdowns, labor disputes, and governmental regulation and permits, also pose a threat to revenue growth. Commodity price fluctuations, uncertainty in production at mineral exploration and development properties, lack of infrastructure, and failure to complete strategic investment by the U.S. government are other factors that may impact revenue negatively. The company's operating cash flow status has been inconsistent across different pages. On some occasions, it has generated positive operating cash flows, while in other instances, it has incurred negative operating cash flows. According to the information provided on pages 60 and 120, the company is indeed generating positive operating cash flows, with undiscounted post-tax cash flows of $3,019.9 million and a change in cash of $25,762 respectively. This suggests that despite some fluctuations, the company has been able to maintain a positive operating cash flow in certain periods. The company has experienced significant changes in its debt level and interest expenses over the past year. The total debt has skyrocketed from $903,000 in 2024 to a staggering $33.2 million in 2025, indicating a substantial increase of nearly 37 times. This drastic rise is also reflected in the company's liabilities, which have grown from $761,000 to $977,000 between November 30, 2024 and November 30, 2025. Furthermore, the introduction of a derivative liability with a value of $30.7 million in 2025 has led to a substantial increase in interest expenses. This new financial obligation has undoubtedly contributed to the company's rising debt burden, making it essential for stakeholders to closely monitor these developments and assess their impact on the company's overall financial health. Management's outlook for the company is centered around expanding mineral resources and advancing key projects through technical studies. The strategy aims to create value through ownership and advancement of these projects, with a focus on developing the Arctic project towards production. However, management acknowledges that the company may incur losses until its mineral projects generate sufficient revenues. The company's growth plans are contingent upon obtaining additional external financing, which poses risks to operations. Management is cautious about future acquisitions due to potential pressure on cash flow and significant integration costs. The strategy also involves reinvesting proceeds from a strategic investment in the UKMP to advance exploration and development. Management assesses the possibility of impairment in its equity method investments, including Ambler Metals, and notes that the U.S. government may become a larger shareholder. The company's tax status as a PFIC could have adverse consequences for U.S. holders. Overall, management is focused on advancing key projects while managing risks to operations and cash flow. Acquisitions and divestitures are crucial components of a company's growth strategy. In the context of Trilogy, several significant acquisitions have been made in recent years. One notable acquisition is the joint venture with NANA, which provides Trilogy with an ownership interest ranging from 16% to 25%. Additionally, the mining lease on Bornite lands and ANCSA lands grants Trilogy a 2% net smelter royalty. The company has also acquired a 50% interest in Ambler Metals through its partnership with South32. Furthermore, Trilogy has entered into joint venture agreements with strategic partners, allowing for shared ownership and risk management. The company has also issued units to the U.S. government, providing them with an ownership stake in the business. These acquisitions demonstrate Trilogy's commitment to growth and expansion. On the other hand, divestitures are also a significant aspect of Trilogy's strategy. The company has sold certain property interests, marketable securities, and transferred interests in joint ventures or net proceeds, royalties to the U.S. government. This transfer is subject to first right of refusal, ensuring that Trilogy maintains control over its assets. The U.S. government has also acquired shares from South32, further solidifying their ownership stake in the company. The 10-year call option granted to the U.S. government allows them to acquire additional common shares at a predetermined price. These divestitures demonstrate Trilogy's willingness to adapt and adjust its portfolio to achieve its goals. In summary, Trilogy's acquisitions and divestitures are key components of its growth strategy. By entering into joint ventures, acquiring new assets, and transferring ownership stakes, the company is positioning itself for long-term success. There are concerns about the potential for significant inventory buildup in the industry. This risk arises from several factors, including early equipment order placement, with extended delivery times of up to 3 years. Additionally, a delayed delivery strategy may lead to further complications if payment formulas are not in place on time. Another concern is that plant operations might be forced into care and maintenance mode due to a lack of ore, which could exacerbate inventory buildup issues. However, despite these potential risks, there is currently no clear indication of supply chain disruptions. That concludes the financial summary for Trilogy Metals Inc. Feel free to comment below, and I will be happy to answer them when possible.